Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about 3 stocks that are better than Palantir Technologies. Now, I want to say that these 3 stocks are not meant to replace Palantir's PLTR stock in your portfolio, but rather, while the PLTR stock is downtrending, the gains from these other 3 stocks in a very similar sector and market can help minimize any losses that you have experienced from the PLTR stock until Palantir actually starts to scale their overall business, so the stock price can start appreciating again. But until that happens, these other 3 software companies may be nice to diversify into while Palantir stock is falling. So what are those 3 companies? Well, first I want to talk about Palantir Technologies. So Palantir Technologies, ticker symbol PLTR, currently trades at $12.92 per share. The low-end price target among analysts is $13. The average price consensus is $20.17 for the next 12 months, and the high-end price prediction is $25.30. And if you didn't know, Palantir is a big data and analytics company that sells operating systems to both commercial clients as well as government agencies. And the PLTR stock has been hit very hard lately, trending all the way down to around $12.92, mainly due to the tech sell-off. This gives investors a fantastic buying opportunity because the stock price has fallen around 60.8% over the past year and 31.6% year to date. So Palantir is trading at a fantastic discount right now, but how do we keep our heads above water? Because we don't want to hold on to a losing company unless we are also making gains. So the way to make gains is to diversify into other very innovative software industry stocks, such as the 3 mentioned in this video. So what are these companies that we could potentially diversify into? Well, first I want to say that the research firm Gartner expects the global IT spending for the overall market to rise about 5.1% year over year to around $4.5 trillion in 2022. So even though these 3 companies all revolve around IT spending and IT technology for information technology, there is plenty of room for all of these companies to grow simultaneously because the overall market, according to Gartner, is so large. We want these companies to have very good financials, and we also want them to be fundamentally strong for their underlying business. So we're going to start off with VMware Inc., ticker symbol VMW. The current stock price for VMW stock is $131. The low-end price target, according to analysts, is $116. The current 12-month price target for the stock is $148, and the high-end price prediction is $180. 33 analysts currently cover this stock, and 16 of these analysts say to hold the stock, while 17 of the analysts say to buy the stock, while no analyst out of these 33 said to sell the stock. VMW is an American information technology company that provides software for modern applications, which would include network security, digital workplaces, and various products for multi-device, private clouds, and multi-cloud environments, according to this article. Why some investors really like VMware is because it's actually a spin-off from Dell Technologies, which took place back in October 29th of 2021. So this is actually very recent, and the company already has strong fundamentals and an underlying business. They also recently entered into an agreement with BT, which is a leading global communication service provider, and this agreement is anticipated and projected to widen the overall customer reach of VMW, and this will also increase their overall revenue streams because this is such a leading global communications service provider. Speaking about their revenues, VMW's total revenues increased by around 11.3% year over year, all the way to $3.19 billion, which increased at a rate of around 21.3% year over year to $519 million, which is fantastic news. And the company's cash and cash equivalents that they have on hand increased by 166.4%, all the way to $12.5 billion. So they literally have $12.5 billion just sitting in cash or cash equivalents or short-term investments on their balance sheet. The company also has very positive EPS estimates, and they have surpassed analysts' estimates for their earnings per share for the last 4 quarters, which means that they have consistently had earnings beat quarter after quarter, which is fantastic news. The company, according to this article, has an overall buy rating because it's rated as a B stock. And within the industry that this company operates in, which we're going to use as the software industry and business industry, it actually ranks number 4 out of 59 stocks. So this is one of the top 5 stocks in their respected industry, which is fantastic news. Our next pick is F5 Incorporated, ticker symbol FFIV. The current stock price is rather expensive in my opinion at $204 per share. The low-end analyst price target is $17.76. The average price consensus is $243, and the high-end price prediction is $303. 19 analysts currently cover the stock that I researched, and 12 of these analysts say that this company is a fantastic buying opportunity, while 5 analysts said to hold the stock because they think that it can continuously scale and why it might not give investors very good returns immediately within the next 12 months. Over time, it's supposed to give investors very lucrative gains. However, with that being said, 2 analysts actually say to sell this company. F5 Incorporated provides multi-cloud security and application delivery solutions for network applications, servers, and storage systems, according to this article. F5 had very good net revenues recently, and their net revenues have actually increased at a rate of almost 10% year over year, coming in at $687.1 million. Their net income also increased above 10% at 10.9% year over year to $179.03 million. The company's net income per share also grew by around 11.6% from a year ago to a value of around $2.89, which is absolutely fantastic. This is a very good company. Analysts have a revenue forecast for F5 for the fiscal year of 2022 of $2.76 billion, which would represent a moderate increase for their revenues of around 6% year over year. So nothing crazy like Palantir is giving us by increasing revenues by around 30% until 2025, which is absolutely insane. However, this company has passed and exceeded what analysts have projected for their earnings per share for the past 4 quarters, just like VMware. So again, this is another fantastic and well-rounded company that has beat their earnings report quarter over quarter. According to this article, they rate F5 as an A rating, which means that the stock is a strong buy rating according to their article. However, I personally would take VMware, and I would also take Palantir over this company. However, that's not to say that this company is not a good company in and of itself, because according to the article, it's actually ranked as the number 1 company in the software business industry out of 59 stocks. Lastly, we have Amdocs, ticker symbol DOX, ticker name DOX. The stock price currently trades at $77 per share, which to me is a very good current price target because the low-end estimate according to analysts is $80, and I love to see the current stock price below the low-end estimate according to analysts. The average price consensus among analysts is $89, and the high-end price prediction is $99. Out of the 9 analysts that I researched that cover the stock, 6 of them said to buy the stock, and 3 of them said to sell the stock. So we do have somewhat of a mixed basket here, but I'm going to leave it up to you to determine if this stock is good for you to buy. According to the article, DOX provides software products and services worldwide for communications, cable and satellite, entertainment, media industry, mobile virtual network operators, and other service providers. So overall, this company is very diversified and has a plethora of customers. Speaking of which, they recently signed a multi-year agreement with Indonesia's leading communication service provider, and this happened very recently on February 1st. The company also extended its long-term partnership with Vimeo, which is fantastic. DOX also partnered with Vodacom Group, which is an African connectivity, digital, and financial services company that already has existing and operational 5G-ready architecture. So with these partnerships and these collaborations, this has increased their overall reach, which in turn has given them more revenue streams, thus increasing their overall revenue. DOX revenue has increased by a measly 1.7% year over year to $1.1 $3.10 billion. Their operating income grew by around 3% year over year to $193.61 million, while the company's EPS or earnings per share increased by 3.4% from the prior year all the way up to $1.20. So overall, this is fantastic news. According to this article, they give this stock a B rating, which means that this company is a buy, and among the 59 stocks in the software business industry, this is ranked number 5. Now, personally, I like Palantir than all 3 of these companies, so that is where I am putting my money because I am already diversified in other companies that are similar to these 3 companies. However, if you are not properly diversified, you're taking on too much risk by overexposing yourself just to a single stock, unless you're planning to hold very long term in Palantir Technologies, which means that you need the stomach to deal with these downtrends and volatility in the short term so you can get the long term gains. And this would require holding Palantir over the next 3 to 4 years. But I would love to hear your thoughts. What are your thoughts about these 3 companies and Palantir Technologies? Remember to smash that like button right now, subscribe if you are new, and I will see you in the next YT video.